Hi everyone, today's video I will talk about one of the most important things in Forex, how to be a profitable trader using a good risk management. When you place a trade, there is a 50% risk of your trade will go to profit and 50% risk your trade will go to a loss, because the market can move only higher or lower. It's the same odds than flipping the coins. No one will win 100% of their trade. Even the best well-known trader in the world do have a losing trade. But the most important is how you manage your risk. No matter what you've learned about technical analysis, candlestick pattern, indicators, it's all useless without the right risk management and a good trading psychology. Obviously, when you're placing a trade, there is a risk to lose money, but trading in general is like any other business. There is risk everywhere of losing money, but you have to take the risk to build a better future, reach your goals. But it's all about risk management. Well, the risk you take. Your risk needs to be calculated for you to know what you are willing to lose on the worst case scenario. What most traders do, they have no risk management, then they will end up losing money, which they are not willing to lose. When they will get close to their stop loss, they will start to get emotional. When they see the large number they're about to lose on the market, then they decide to remove their stop loss, hoping the price to go to profit. After realizing the price won't go to their direction, they want to jump back in the market to make their money back. They are stressed. How to avoid that? You can avoid that by having a strong risk management and always follow the plan. Even when you're about to lose a trade, don't risk more than 2% of your trading capital. Don't change your stop loss when your trade almost hit your stop loss and hope for the price to reverse. After losing a trade, don't jump on the market trying to get the money back you just lost. It's the best way to lose another trade. How? Well, this is a risk management tool you can use anytime before placing a trade. All you need to work out is where you're gonna place your stop loss by watching your chart. You can choose the instrument right here for any forex instrument, commodities as well. Deposit currency is, you need to choose if, for example, your funds in your trading account is in dollars, pounds, or euro, for example. The stop loss is when you set it up by watching your chart. You need to calculate the amount of pack from your entry to your stop loss. You need to write down the amount of pack, your account balance, how much money you got in your account, and the risk. After that, all you need to do is calculate. After that, you will have the right trade size. The risk management tools will be on the description of the video. Don't try to grow a small account by taking massive risk. You will end up blowing your trading account. The next video will be about trading psychology. If you have any question, leave a comment on the section below. Don't forget to like and subscribe. Thanks for watching.